Thanks for watching On Point. Let's take a look at your market news now. Asian markets mostly rose on Friday. This brought an end to a tumultuous quarter that has seen sharp losses around the world. And unfortunately, the China-US trade tensions continue unabated. Japanese stocks closed in positive territory, with the Nikkei share average ending the session up 0.2%. Hong Kong stocks had a particularly good day. The Hang Seng Index rose 1.6%. While the markets rose, China remains a concern for many investors, where the main stock market is in bear territory after losing more than 20% from a recent peak, while the yuan continues to struggle. The Shanghai Composite Index jumped 2.2%. US stocks rose last night as growth sectors such as technology rebounded from the previous session's decline, and financial shares snapped their 13-day losing streak. The Dow Jones Industrial Average rose 0.37%, the S&P 500 gained 0.58%, and the Nasdaq Composite Index added 0.77%. For more on the markets, we cross to Francis Hurd. She's standing by at the Johannesburg Stock Exchange. Francis, what's happening with the rand amidst all these trade war fears and these drops in the US markets?
Well, the rand has steadied off. We're looking basically similar to yesterday's level, sort of late afternoon. At least it has moved away from that dreaded 14 rand to the dollar mark that we hit early yesterday, which was a new 7-month low. So steady for now, mainly because the dollar has been a bit weaker today. So at least the dollar, often we go in opposition to the dollar. So we're not strengthening, but at least we're not weakening, while the dollar is weaker for now. The JSE is flying still above 2% up, and you've touched on what's happening there. Tech stocks rebounding. 10% in China. Of course, Naspers' big investment there in technology, and that's helping to lift the whole market because Naspers is so big. Also, optimism around the world because of that migration deal that you guys have been covering this afternoon. I'll be bringing you some analysis. First, let's quickly look at how the numbers are behaving right now. Warwick Lucas from Galileo Capital with me live from the JSE. Thank you for being with us, Warwick. So it started off as a dire week, but now the JSE up more than 2% today.
Yeah, I think a little bit of reversion, not just on the Friday, but we're actually at quarter end. So globally around the world, we've got unit trusts all closing out the year ends. You tend to get a little bit of reversion of whatever the trend was, and unquestionably this last quarter was negative, and I think that's filtering through to some degree.
All right, and Naspers must be a big driver, up 3.5% last I looked. So is that linked to what's going on with technology?
Yeah, a little bit of that. I mean, it's certainly Tencent, which is the underlying biggest investment there, had a very rough week in China over the last week. So I mean, that was down about 6% before some recovery coming in today. Yeah. So yeah, a big part of that. And I think generally tech being the big story globally. I mean, as far as US markets go, I mean, that's the only sector. The Nasdaq is the only index of those big US indices that's still up on this year, and we'll see a similar effect coming through in the Chinese markets with Tencent, Baidu, and so on.
Okay, so good for now. And banking stocks looking behind us also seem to be doing well.
Yeah, I think that's certainly helpful that we may see the rand actually coming through as a shock absorber. So although the rand has been horribly weak, underlying in the economy, like we saw at the tail end of the Zuma era, despite everything looking terrible, the rand again acted like a shock absorber, and I think we're looking at the same effect coming through now. I mean, the rand has been looking weaker than the sick kitten at the moment, and I think the economy, though, going to need a little bit of relief from that.
Well, motorists won't be getting relief. That combined with the oil price, are we going to look at a definite fuel price increase? What are the implications of that as well across the economy?
It definitely looks odds on for that. I mean, that's going to be a constraining point for sure. I mean, we've had strong oil price. And of course the currency. So you're looking for the offset for that to come through in our manufacturing data and in mining data. And frankly, it's going to be corporate SA that picks up a little bit in the next quarter rather than the consumer. I think the consumer for now still staying very, very pat.
And a lot of pressure. The rand relatively weak, but it's off 14 rand to the dollar. And a debate this week with some of our guests has been, is this global? Are we just moving in opposition to the dollar, or is it Eskom? Is it local factors? Where are you in that debate?
Bit of both. I mean, it certainly has been an ugly story across emerging markets, and more particularly those that are commodity orientated. And one can see that coming through in the so-called credit default swaps rates, which are for viewers out there, that's the rates at which sovereign countries have to reinsure or see their debt reinsured against default. So SA is featured in there, but so is a lot of other emerging market countries. So we're not the only issue there at all. I think local issues have been a problem. We do have to take some local political steps and so on, but there's a wider issue out there as well.
All right, so it's not only local issues. Let's focus on individual stocks now. You've been looking at Capitec, some movement there. Okay,
so we saw that there's some settlement there between Capitec and Summit Financial Partners. Basically, Summit Financial Partners was acting as a class action aggregator against some of the products issued by Capitec that got fingered by a research outfit called Viceroy in one of their reports. There certainly was, shall we say, the smell of a smoking gun there, and I guess that now doesn't find its way to court. Whether that's a good thing or bad thing is perhaps difficult to say, but I think if there's some kind of resolution, and I don't think Summit would have walked away without some kind of resolution, perhaps.
Well, has Capitec done enough to assure the market that it's strong? It keeps on saying we're nothing like African Bank, we're being careful. Is it being believable?
I think it's believable. I think the core issue is SAB in the picture there, the Reserve Bank, and I think yes they are, and I think that's the most important point, that with Capitec we're not looking at some kind of African Bank replay here. That somewhere in the middle, SAB, if nothing else, has been able to kick the tires and satisfy itself that the right ratios apply in the case of Capitec.
And then Sibanye, I mean, sure, they've been hit by fatalities, a lot of concerns about what's going on at Sibanye, and this now weighing on the share price.
Well, what's also the latest kick there has been class action coming from US shareholders, basically citing these deaths as a primary cause of the share price fall. Issues aside on the effectiveness and worthiness of shareholder litigations generally, I mean, it is, look, mining deaths are clearly an important issue, and but it also relates to the fact that South Africa is really very mature in the gold mining space. I mean, our production has fallen below 1910 levels, so that's really what happens as you go deeper and deeper and these ore bodies run out. So do they actually have merit? Look, I mean, Sibanye might have had a bad run. Whether it's actually going to clear anything up remains to be seen.
And maybe the fear, more regulation affecting all the gold miners, but we have to leave it there. Thank you so much for your time. Warwick Lucas from Galileo Capital, and that's a wrap from us, live from the JSE.